Thank you so much for joining us here on a Crop Progress Tuesday, as we like to refer to it here. I'm Marlon Bowling with you. We're watching your ag commodity trade, which has been fairly quiet in a lot of respects today. Here to talk about it, we go to check in with Brian Hoops of Midwest Market Solutions. He's based in Springfield, Missouri. And Brian, thanks for coming on board with us here today. Always good to chat with you here about the markets. So tell me what you're reading on the tea leaves here. When you look at the grain trade today, it seemed on the surface like we've had pretty bullish stuff affecting the soybean trade, but you can't tell that by looking at the prices. How come?
You know, the beans rallied up to the 977 resistance point, and we had a tough time getting above that. We expected we'd see a little pullback here now, and without any private export sale announcements this morning, there really wasn't enough news to continue to probe that resistance. We're starting to fall back, and you could call it a little profit taking by the long traders if you wanted to. And I think as we get into 950 support area, that's going to be where some buying interest is going to come back into the soybean market. There's been a little bit of yields coming out of some early harvested data, and they've been all over the map. Some have been much better than expected. Obviously, a lot of them have been worse than last year. So it's not enough news really for the trade to get a clear direction that we've got a much smaller crop than expected, much larger crop than expected. But either way, we're seeing a setback today on some long liquidation in the entire grain complex.
And we have had pressure in the wheat, and I see where we have about 13%, I believe, of the nation's winter wheat now planted. That's actually a little bit behind the 5-year average, I believe, but the wheat markets seem to not be taking that news very well.
Yeah, I think they're more focused on some rain in the winter wheat belt. There's been kind of dry conditions through the summer, but rain is falling. Big chances of rain later this week for some of that dry areas of the winter wheat belt to get some good moisture, and that's really going to be a benefit to the crop. And that's what the market's starting to focus on, is that crop getting planted with moisture. It makes for kind of an ideal planting situation, and I think we're seeing premium being taken out of some of the prices because of it. As a result, we're hearing numbers out of Stats Canada that they have a much larger crop than a year ago, and that's offset by news about Australia's crop being much smaller than a year ago.
Yeah, we have some winter wheat planting numbers for our viewers and listeners. Colorado 23% done now. Idaho 22% complete on their wheat planting. Montana 16% done. Nebraska checks in at 23%. Oklahoma 11%. We also have Oregon with 8% of their crop in the ground. We have South Dakota all the way up to 30%. Planted on their winter wheat. This is not spring wheat, but winter wheat. That's ahead of schedule. Texas 14% done. That's right on target. And Washington State 43% compared to a 5-year average of 50%. Let's take a look at our prices here on the board and see where the corn and soybeans and wheat now stand. We have that corn market on December now down 4 1/4 at 347 1/4. That's a new low for the day. On the soybean trade, we have the November contract now trading at 960 1/2. That's down 7 1/4. The weakness seems to be increasing here. On the wheat trade that we were just talking about in Chicago, December, we're down 5 at 438 1/2, about a penny and a quarter off our low of the day there. Kansas City wheat, we have December now trading at 437 1/2. That's down 4 3/4 cents on the day. New crop July, by the way, is down a nickel at 484 per bushel. And if you look at the Minneapolis wheat trade, we now have December down 5 at 617 1/4 per bushel. Meanwhile, on the cotton board, here we have December now trading 39 lower at 69.11 cents per pound after it did trade higher for a little bit after the open this morning. Brian, we'll come back and you and I will talk about our cattle and hog markets and see what's surrounding all that action when we come back right after this. I want to share with you some pasture condition ratings that came out from USDA yesterday, along with their crop progress and condition updates. So pasture and rangeland is considered in that mix. Now, we had Texas reporting 49% good to excellent this time around. That did go down 2 percentage points. Look at Oklahoma. I had to check this and double check, triple check. I believe we had 3 of us triple checking this, and Oklahoma did in fact go down 17% or percentage points in their good to excellent rating, down to 45% good to excellent last week. What happened in Oklahoma last week? Kansas down 5 percentage points at 45% good to excellent. Nebraska actually stayed unchanged at 30% on the pasture conditions in what I call the western Midwest. If you move further north, we have Missouri at 50% good to excellent. That went down 3 points. South Dakota at 15% good to excellent. They've been in terrible shape all year long. They went down another 2 points last week. North Dakota, however, with the recent rain, did bounce. They went up 2 points at 10%. Montana gained 4 points last week. They're at least up to 8 percentage points on the good to excellent category. And then Minnesota went down 4 points to 54%. Let's take a look at our live cattle trade right now. And on the board in Chicago at the CME Group, we have October live cattle now down 20 cents at 107.38. December down 33 cents at 112.62 per hundred. And if you look at February, we're 8 higher at 116.58 per hundredweight. On the feeder cattle side, here we'll start with October. We're 40 higher at 152.35, and November 30 higher at 152.50 per hundred. Let's go back to Brian Hoops at Midwest Market Solutions. Brian, this cattle complex seems to be straddling the fence here, going higher and lower at different times during the day. It's hard to make up your mind which way we want to go here.
It's very frustrating to the traders. It's a real choppy market. And of course, no one likes choppy markets. Everybody wants to trade in a trending market, whether it's an uptrend or a downtrend. But we're seeing really a different structured market with October trading sideways the entire month of August and all the way through September so far. The December contract is starting to build some premium. February is building premium. And all these markets in the deferred contracts are putting in a lot of premium compared to October. Longer term, that's bearish, as it encourages producers to add weight to their cattle because they're promised a higher price in the next month and the next month after that. You look at the feeder cattle market, a lot of strength there, a lot of demand for our feeder cattle. We hit contract highs in some of the months, specifically back into the January and the March contracts, all moving to contract highs. And those prices are relatively very similar in price structure.
All right, so we can see the chart for our viewers at home. You can tell that the feeder cattle market has definitely been on a stronger trend than what the live cattle counterparts have been. Looking at the lean hog trade here right now on the futures board, we had some firmness, especially in the December today, and we have October now up 62 at 62 per hundredweight, and December now up $1.18 at 59.23 per hundred. So it's up there within 20 cents of its high of the day. We're almost, well, I guess you'd call it about $1.30 off of our earlier low today. We have had higher hog weights recently, Brian, but it seems like the primal cuts finally firmed up again yesterday on the pork side. What's your prospect or your notion for what the pork might do here moving forward now?
Yeah, we really need those cuts to firm up and start to move higher. We need a little bit better demand trends out of this hog market. Our plants that are coming online a little bit slower than expected, and that's enabled the cash markets to stay weaker for a longer period of time than was expected. As those plants do come online, it should firm up the cash bids and kind of put a bottom in these hog market. But for the time being, the futures are sitting near their lows, trying to find some sort of a support area and rally off of it. And I think we're going to see a little bit more strength as we go into the last half of September as we get more slaughter capacity.
And of course, we'll be getting a new update on the pork and beef cutout values coming up at the top of the hour. So we'll find out more information at that time. Brian, as always, great to visit with you. I appreciate that very much. Hope you have a great trading week out there at Midwest Market Solutions.
All right. Thanks, Marlon. Appreciate it.
Anytime. Brian Hoops. He happens to be the president of that organization there in 6 states.
Wowee. All right. Thank you so much, Markets Editor Marlon Bowling.